Soybeans in the teens. I want to show you potentially a better way to trade soybeans. So if you have the all strategy access, you have beta 2021C. It includes some of the strategies that we are trading, such as 60-minute breakout. I'm going to copy that one. A right click, copy window, and your license does not limit the symbol on this one. So I've got this strategy set up on the NQ. I want to set up on soybeans. So is there a better way to trade soybeans? So this is what I did there. I just simply did this, and I changed the symbol to soybeans. No input setting changes, nothing. Just simply change soybeans. And so what happens here if we take 60-minute breakout on soybeans, and this is something that I wished I would have had anticipated. Oftentimes if you anticipate a bull market, which we have since around at least $12 soybeans, so at least $12, it's already up on the year 36.6250. So oftentimes you'll look back at this and say, wow, that's great, but maybe you catch it a little late. At least maybe would have been a worst case scenario had you thought about this in advance, would have captured this in January and been up 36.6250 even if you had missed these others. But look at how well this does the last 7 months. I usually keep these the data back about 7 months on some of these. Profit factor 4.14, 22,375, 28.50 drawdown. Here is the equity curve, and so nice gains in soybeans the last 7 months trading breakouts. You can't always trade breakouts, so this is a long only breakout setup. So what if I take the symbol back, say 3 years instead of 7 months? So 3 years back, the results are definitely not going to be nearly as good. Let's see if they're positive taking breakouts. It's positive, but you have a $19,000 drawdown. So you see this drawdown here, and then well, since pretty much the pandemic, soybeans have skyrocketed. So will beans go to 20? We talk about beans in the teens. Today there was the crop production report, and our soybean swing had a short trade. It was stopped out. I'll show you that in the daily report. But there were no other trades today, and the market just broke out. So 60-minute breakout was already long if you'd have been trading this. And so soybeans are at $14, and I've said that we could potentially see $20. Would not be surprised to see $20 soybeans. So that kind of market that we're in, we could have some more breakouts. When you trade a strategy like this that's this hot, you never know when it's time for it to cool off. And so it's possible the strategy could cool off, and it would maybe not be as profitable. Maybe if you start trading it here. But when you anticipate a strong bull market in stocks or commodities, breakouts can definitely be a strategy that can work, but you have to trade it at the right time. So let's check the other soybeans swing strategy, or the NQ swing strategy. Let's go back 7 months so we can compare them equally, 7 months back. And I'm going to show you the other NQ 60-minute breakout strategy. This one has a $1,500 stop loss, $1,400 profit target. Let's go back and grab this one. This is the A version of 60-minute breakout. And so let's try this one on soybeans, see what happens. Take this off and do that. Remove the output indicator because it's for NQ. And we're going to change this to soybeans. Soybeans is breaking out. Does it work on this version? This has a tighter stop loss. It has a $500 stop loss. So if you don't want a $1,500 or $1,400 stop loss, then you can trade this one with the $500 stop loss, 2.79 profit factor. You get more trades. Your percentage of profitability is lower because you have a tighter stop. And still nice results, $2,100 drawdown, $17,000. And there is the equity curve, very nice. The last trade is a loss. Today would have been a losing trade because of the volatility related to the crop production report. And then let's take a look at 3 years back. See if this one does better or worse than the other with a tighter stop loss and a couple of different parameters. So we see that this one starts working in April as well. So back in April of 2020, this one has started to work, and so these are results. So this one does better the last 3 years, and in the short term, but this one has a tighter stop loss. Let's look at it from April the 20th or from April the 19th. And so from that time, it is 19 of 38, 2.8 profit factor, $18,000. There it is. So if you anticipate a bull market, you want to take the extra risk to trade breakouts. These are the type of strategies that can do that. If you have the all strategy access, you have access to these two strategies. You can test markets in breakout mode. If we talk about a commodity bull market, well, the commodities go into a bull market, and how should you trade them? Sometimes the markets just go up and run. They don't give you a chance to buy pullbacks, and so the only way to really capture moves in runaway markets is to just take breakouts.